Good morning, guys. Thank you for joining us on the Bayou Connection this morning. Today we have David Soliman and Kristen Quigley with Faubourg Private Wealth and Art Consultants here to talk about some financial planning advice and some property and casualty insurance information they'd like to share with you guys. So take it away.
Absolutely. Well, I guess let's get started on the financial planning side. Allow me to introduce myself. My name is David Soliman. I am managing partner of Faubourg Private Wealth. We are a private wealth management firm headquartered right here in Metairie in the old TGI Fridays building. Well, I guess we're all headquarters from our living rooms for the most part right now. But just to tell you a little bit about us and to talk a little bit about financial planning in general. I initially got into this industry because I really enjoyed helping people with money. Money is something that's not understood by a lot of people. People need help with it all the time, but people don't tend to get help with it. And as I've evolved through this industry, I've really discovered what the problem with the wealth management industry is. And that problem is that it sucks. The reality is that wealth management is very fragmented. There's a lot of people that are doing a lot of things that they shouldn't be doing. A lot of underqualified people that are involved with the industry that are handling people's money. And the more I got into it, the more I realized that the industry kind of has to change. So we kind of have taken a very unique take on wealth management and how we engage with people and how we try to improve that for clients. When I say it's fragmented, I mean it's incredibly odd how many different advisors or how many people interact with as far as their money's concerned. They have their financial advisor. They may have their life insurance guy. They have their property insurance contact. They have their CPA. They have their attorney. They have their realtor. And none of those people actually interact or talk or coordinate at all. And to a degree, you have financial planners that try to coordinate some of that. But at the end of the day, if you're dealing with a financial planner that works with one of those big insurance firms, your financial plan is going to end up saying that you need more insurance. So you haven't really fixed much. I mean, if you don't have everything working together, you have these gaps that are incredibly, incredibly dangerous to your portfolio or to your financial life in general. For example, if I'm an investment advisor and I make you 20% on your investments, but I cost you 30% in taxes, have I really accomplished anything? Or if I help build you a $5 million portfolio, but you have a 16-year-old that can't drive very well and they hit someone and you don't have the right type of insurance to cover you, have I really done anything for you? There's been a lot of time over the years where you really see how you can fix by filling some of these gaps. Financial planning is important, and it's important to have that one person that can take kind of that everything that's out there and tie it together. You can't be an expert in all of it, but you can have that person act as kind of a personal CFO. That is the one that's running point, talking to all your team of experts or helping create that team of experts if you don't have it themselves. Oftentimes as realtors, you're involved with critical points of a client's financial life, whether it's, a first-time home buyer because they're about to have a new child, or if it's someone that's trying to deal with an estate because a family member passed and they're trying to sell a house that way because of that. So oftentimes you're intimately involved with those decisions. And it's still remarkable to me that most realtors don't have a close relationship with an advisor that can help their clients really make the most of some of these financial decisions. So, everything we do is team approach in that respect. I know the biggest interaction that we tend to have with realtors is on the property and casualty side. That's been a big concern for me over the years, just because of some of the errors that I see that get created, some of the errors that I have stumbled into headfirst myself. But let me hand it off to Khyrstyne to talk a little bit about our insurance offering through ARC Insurance Consultants and how that's a little bit different than probably your typical property and casualty agent that you might be dealing with currently.
Cool. Hey guys, can everybody hear me? Dave, can you hear me?
I can hear you great.
I make sure that I didn't want to mute myself. Okay, I'm Khyrstyne. I'm actually going to pull up a PowerPoint. It worked earlier. Maybe. All right, bear with me. I promise it's going to work. There we go. Okay. It wasn't showing up.
Oh, there we go.
Cool. All right. So I figured everybody could use a little bit of pizzazz on their Thursday morning for this presentation. So I added a little bit of glitter. It's New Orleans. Why not? So we are ARC Insurance Consultants. I spelled that wrong. Wow. All right. Anyway, we're just going to skip this slide. Not skipping. Oh. Now we're loading. Awesome. Okay. All right. So I'm Khyrstyne, and I am Faubourg's and ARC Insurance Consultants Property and Casualty Specialist. I also work at Faubourg as the Director of Client Relations. My background's not in finance. So when Dave talks about finance and insurance and how they can relate, I can firsthand speak on that because dealing with any other insurance company isn't like dealing with us. I have a background, my bachelor's was in fire, arson, and explosion investigation, and my master's is in fire protection engineering. So after going to grad school, instead of joining a fire department or going into fire investigations, I ended up in insurance. So I worked for AIG, you might know them from 2008, and I did their loss prevention engineering. So what that means is I would go into places like SeaWorld or a hotel or even your kid's school and analyze their buildings for, is their fire system up to date? Is their roof okay? Are they following basic human element programs that can prevent things from happening? I have worked overseas as a fire and explosion investigator, and I still actually carry those certifications now. So along with that, the fire helmet's behind me. I have been a firefighter. That was up in Delaware, where I'm from. So none of that really wrapped into finance at all. Never in a million years did I think I would end up working in a financial advising office because I knew nothing about it. But what I found out is I know more about it than what I thought, because it kind of follows along with the same principles of helping people. Like Dave said, he was out to help people financially. I was out to help people with fires or with insurance, things like that. And so when he brought me on, the insurance thing and kind of stuck, and we went from there. So, all right, enter doesn't work. There we go. All right, so why we should approach insurance like financial planning. Like Dave was saying, it's about a relationship. It's about knowing your clients, knowing, hey, Susan's about to have a baby. They're about to buy their first house. Buying your first house is terrifying. Been there, done that. But it's getting to know what they need. So things like on their homeowner's policy, are they covered for sewage backup? Some people might not be. And then when that happens, they're going to be staring at their insurance agent like, why don't we have this? I thought you were like supposed to help me. And then along with that, it's what can they afford? Do they need an umbrella policy? Are they underinsuring their current wealth? Or are they missing other important coverage like auto liability, things like that? We also need to find policies that are best for their situation. So are they adding in a pool? Are these things that are going to like become issues in the future or things like that? Also with us, we do regular check-ins. So we're going to send them newsletters based on things that are happening around the world, in the country, in Louisiana. We just sent out one about hurricane season. So that's something that I think is definitely helpful, because you get these mass emails from large insurance companies that nobody ever really reads. And I think that those can be pretty beneficial. All right, so
As Kristen goes into this, I want to point out that we basically built this insurance company, our property and casualty practice, to approach it as financial advisors, as fiduciaries, which I'll talk a little bit more in a minute. But it's why you might see a little bit different in tone, is because we didn't come up through the insurance side to create this. We did it from a more advisor caretaker side. But go ahead, Kristen, I'm sorry.
No, you're fine. So on the insurance side, we can shop all 31 independent carriers. So not just one or two or three, we're shopping all 31. That's home, auto, flood, umbrella policies, commercial property, we have workman's comp, pretty much any kind of insurance you could think of, we can write it. If somebody has their premium go up by more than 10% at renewal, we will automatically reshop it. You don't necessarily see this a whole lot, which makes us different. If you know how insurance works, the insurance agent makes a percentage off the premium. If you have flood insurance that goes up every 5 years by 2, 3, 4%, you might not notice it, but after 5 years, that's still a good amount that it's gone up. Your flood maps could have changed and you should be paying what's a lower rate. But if that insurance agent doesn't really care and is just in it for the commission, they're not going to reshop that. They're not going to tell you. They want you to come to them. Whereas we're taking the approach, we're going to you first. We're not in it for that. We are completely 100% client facing. We want that relationship to be a strong one, and we don't want any second guessing. So like I said in the first slide, all the coverage is analyzed to meet the client's needs. So I will personally sit down either with an advisor or just with myself and look at this entire policy, make sure they're getting the right exclusions, if they need anything added, things like that. We also assist with the FEMA hazard mitigation grants. And if you don't know what that is, after Katrina, FEMA came in and they offered these grants if you applied for it and you qualified for certain neighborhoods, and they still do. Dave can actually attest to this a little bit more than I can, but it's to raise your house. But this process can be daunting and tricky, and people will tell you you don't qualify, so you don't do it. But we want you to do it. If you can get the free money and raise your house to be safer, that's definitely something that we can assist with and get you connected with the right either specialist or look at documents or anything like that that you would need. Do you want to touch on that a little bit?
Yeah, so this company largely exists because of my personal experience with property and casualty agents. My wife and I have a house in Broadmoor. We had bought it before my wife, who's a realtor, Michelle Soliman with Berkshire Hathaway, before she became a realtor, we had bought that house. You know, we were young, didn't quite understand the whole flood insurance thing, you know, didn't really think too much about it. But as years went on, our house turned into a severe repetitive loss property. If you've ever had to deal with flood insurance, what severe repetitive loss means, basically you've had, I believe it's three events over the course of 10 years or 3 events over the course of 20 years, and it sticks with the property. And ultimately what happens is that your insurance will basically continue to rise until it meets the actual actuarial value of what it should be. So for us, when we bought the house, the flood insurance was $900 a year. It is now at $7,000 a year on that property. About 3 or 4 years ago, when we got another renewal and it had gone up yet again to about $6,000, we reached out to our property and casualty agent and asked them, there's got to be some way to mitigate this. And they said, well, we have a flood elevation certificate on file, so there's really not much we could do. So we asked them about hazard mitigation grants. They said, you know, they're not that common and you're not going to qualify for them. So we kind of put it to rest. Cue the city of New Orleans' inability to drain the city last year, and I started researching it again after our house flooded yet again. Found out that hazard mitigation grants are not really that uncommon, and they are actually pretty easy to get if you go through the process. So we applied for a hazard mitigation grant. It does look like we're going to get approved for it this fall, and it looks like that's going to give us $200,000 to raise a house and drop our flood insurance from $7,000 to $500. So from an insurance agent perspective, if insurance is the only thing that I do, right, and property and casualty is the only thing to do, the only way I can make more money is that if your premiums go up, or I sell you more insurance. Well, from a fiduciary perspective, that's not really a good way to look at it. And when I say fiduciary, and you're going to hear a lot more of this over the next couple of weeks as some more fiduciaries go into place in the investment side. But there's two ways to engage with a client: a fiduciary relationship or a suitability relationship. A fiduciary relationship is when you're putting the client's needs first above your own. A suitability relationship is that the whatever service you're providing just has to be appropriate. So like the two big parallels we tend to draw here is the a suitability relationship is buying a suit and it just has to fit. A fiduciary relationship is buying a suit and actually has to look good too. Or if you want to look at it more like phones, if you need a cell phone and you go into an Apple store because you need a cell phone, somehow or another, you're going to end up with an iPhone. That would be more of a suitability type engagement, as opposed to, say, if you went to Best Buy, there might be like, oh, well, all you need is this flip phone, or here, you might want to check out Android. It seems to fit what you're doing a little bit more. That would be more of a fiduciary engagement. So everything that we try to do, we try to hold ourselves to that fiduciary level, the same way an accountant would, the same way an attorney would, the same way a true advisor would. So that's why we've tried to build this as much of a fiduciary engagement as possible. So, we shop every independent carrier possible. If your rates go up, we proactively will go out and try to find you better rates to keep it in line. We want to make sure that we're not just selling on cost, but that we are actually advising on appropriateness. That it is actually going to cover you if something goes wrong. And then ultimately, if I can help you save a couple of $1,000s a year on flood insurance, by all means, why wouldn't I do that? Because at the end of the day, that's going to put you in a better financial spot. It's going to put your kids in a better financial spot. You're going to be able to better save for retirement rather than spending an extra 50 grand that you don't have to over 10 years for on flood insurance that you're never going to see again. So, it's really key for us to make sure we're engaged and on that level with clients.
Yeah. Good. All right. So another thing that we do is open house quotes for realtors. That would apply to all of you. Typically, we can get you quotes that day for an open house. That way you can have them out on display, trying to give first-time home buyers like, hey, this is kind of what you're looking at in this neighborhood, in this ballpark. Personally, when I had bought my house, nobody did this for me. I was like, oh, I can afford this. And I mean, luckily I could, but when it came to the insurance side, nobody was really there to walk me through any of that. Nobody told me that this policy isn't going to include sewage backup. So if something's wrong and it backs up into your house, that's not covered. And for somebody like me, I kind of want that covered. So it's little things like that we actually take into account, and we want people to know that we're looking into that for them so they don't have to think about it. So we do have a lot of benefits to the clients. If they have questions, if they have concerns, if they need additional coverages, we're there. They can give us a call and we will be on that very, very quickly. Typically our turnaround time is 24 to 48 hours, unless it's a very in-depth policy or commercial property gets a little bit longer depending on renewals and things like that. They're never going to be overpaying for coverages. They're going to get the best quote from the very beginning that we could do. So that way they're not going to think they're playing a game. They're not waiting for somebody to come in better. We will give them the best upfront and be completely 100% transparent with them that, hey, this is what it is. This is what you're getting. And this is how much money you could save. And then we also do the hazard mitigation grants that Dave was telling you about. And we have a lot of contacts through just Dave's experience and people that we know that actually help work on this or work with the cities on this. So that's something else that we can bring to the table.
Oh, God.
You want me to go back?
No, go ahead. You're fine.
Okay. So insurance doesn't have to be complicated. We all deal with insurance nowadays. And it's something that most people don't like. Most people don't like to talk about it. Most people don't like to deal with it. And it can be daunting, especially for new homeowners or business owners or even landlords, having to insure a property that you have tenants on. Like that's a liability issue. But we're there to take that away. We don't want you to spend so much time worrying about, well, would I be covered for this? Or if I'm a landlord, would I be covered if my tenant did this? Like, you shouldn't have to worry about that. So we're there to try to eliminate as much of that worry as possible, so that way you can live your life to the fullest without having to deal with that. People have bigger issues. They have families to focus on. Insurance shouldn't be one of those things. So that's kind of what we look for. We want our clients to be happy. We want them to succeed. And we want to make them the most money possible, because that's definitely going to stick with them more than anything else. And are there any questions?
Let me touch real bit, because I know that I got a message. If I could chat a little bit about financial planning and how it ties in right now with our current economic condition, right?
Yeah.
And I know especially how it impacts real estate. The truth of the matter is that I think we are still in for quite a bit of rough road ahead. I don't think the worst is behind us. I think we are still going to see some significant corrections in markets. But more importantly, I think we're going to see a lot of economic impact, especially here locally. Look, New Orleans relies on three things. It relies on tourism, it relies on hospitality, and it relies on oil. All three of those just took a big shot in the foot. So, you know, to kind of put it in perspective, through the end of April, I'd gotten some stats from the LePage Center for Entrepreneurship and Innovation at Tulane, and they had a really interesting forum as far as what they were looking at, what they saw in the local economy, and what they were projecting forward. To put it in perspective, hotels nationwide are down about 70 to 75% year over year as far as people staying on profitability, whole 9 yards. New Orleans is outpacing that by basically another 15% on top of that. So New Orleans hotels are down 90% through April. We lost a lot of tourism revenue, almost $1 billion as far as incoming revenue, as far as festivals are in to the local economy. Jazz Fest generates $280 million for the local economy. Essence is $200 million. French Quarter Fest is another $100 million. And that's to say nothing of all the other festivals that we would be missing right now. Everything from Greek Fest to Zurich Classic to Po' Boy Fest to and everything else in between. There are some of these festivals that may not recover. It's a significant possibility that French Quarter Fest may never come back. Jazz Fest is strapped, but they look like they're going to survive. Essence Fest, I'm sure, is going to survive as well. When we look at it, the data seems to appear to say that 49% of jobs in New Orleans are at risk of disappearing. 49%. So, I mean, that's extremely significant. And as we go through this phase 1 and phase 2 reopening, there are going to be significant concerns about restaurants, especially being able to survive. I don't know how many of you all have ever worked restaurants. I did another lifetime ago while I was in college, and there's not a restaurant on the planet that can survive at 25% capacity. So there's going to be some significant pressures on restaurants. Now, we've had a lot of stimulus come through, things like the SBA's PPP program, which all of you guys as independent contractors are eligible for. So if you have not applied for that and you want more information, please take down my contact information. It is in the group chat here, and I'm sure Stephanie could send it out to everyone as well. But that is something that you must look at. It is, I hate to say it, I mean, as an advisor, I can't say it often, but it is free money. So it's something where if you can kind of insulate yourself, I mean, I do think there's going to be a short-term hit for realtors. But what I think you are going to see is as rates come down, there's going to be a lot of pent-up demand. So it may go from you're doing nothing to all of a sudden you're the busiest you've been in a year. So be prepared for that kind of influx. One last thing that I'll say about Louisiana in general, for oil, for every dollar that oil drops, it's about a $12 million hit to the Louisiana state budget. So oil is down about $30. year over year. So we're looking at about 360 million off of the state budget. And this is for a state budget that's been kind of getting crushed anyway in general. So it's going to be significant. And I think this is the next phase we're going to start talking about is city budgets, state budgets, how they survive, what programs get cut, and what kind of longer term economic impact we see from that. I mean, living in Orleans, there's only so many speeding tickets that I can get from a red light camera to balance that budget. So, it's going to be interesting to see how some of these cities nationwide, not just in Louisiana, adjust for some of the lost income from sales revenue and for the Gulf South for oil as well. One of the big questions that we get from realtors a lot is lending, what interest rates are going to look like. We saw interest rates drop as low as almost 2.75 in the early part of this mess in March for a 30-year conforming loan. It's still at this point, we see rates spiked right back up, as I'm sure you guys saw, and then they started coming down again. I don't think we've seen the cheapest rates that we're going to see. There is still a significant gap between where we see the treasuries and where we see the long-term interest rates. So, where we see mortgage rates. So keep an eye out for that. I mean, if you've got clients that you're talking to, there's a lot of fear of missing out that's going on right now from clients, but it's one of those things where we tell clients, be patient. We're still very early on in this mess, really through only the first quarter of it. So, I mean, there's a lot of room left for opportunities to buy not only real estate, but for refinancing, for investments, and everything else. I will tell you, people always ask me about the severity of this and what it looks like comparatively. Through now 9 weeks, as of this morning, because the new numbers came out, we have 38.5 million people that have applied new unemployment claims nationwide. So 38.5 million. So how does that compare? Well, during the financial crisis, we lost 9 million over 2 years. So in 2 months, we've quadrupled what it took us to do in 2 years, a decade ago. Since the financial crisis, we had 24 million jobs created. So we've effectively eliminated every job that's been created, over the past decade. Now, what does that look like? Is it a switch that we flip on and everyone goes back and the economy, is it a V-shaped recovery? We're increasingly hearing and seeing that that's not going to be the case. We've heard a lot of comments from everyone from Secretary of Treasury Mnuchin to the head of the Federal Reserve, Powell, that we're saying much more positive things a month and a half ago to much more neutral to negative things now. It is a good time to be insulated. It is a good time to be protected. If you have personal assets that you're investing out there, one of my biggest aggravations with this industry is most advisors will tell you it's always a good time to invest. Well, that's not the case. Oftentimes when you see the house is on fire, it's a good time to get out, wait for it to run its course or try to put it out and then rebuild it. That's kind of where we're positioned with clients right now. We run a very hedged strategy. We've been very insulated from this downturn. Albeit we were hedged because we thought the economy was slowing, not because we thought we would be living, this pandemic, right? At this point, we're telling clients to be cautious. We're telling clients to be patient, that some of the bigger opportunities are still around the corner. We've seen one of the biggest, I'll leave you with this, the 2 areas, if you're watching the economy, if you really want to see how things are going to transform here because of this, is retail and movie theaters. So retail, I mean, we were talking about the retail apocalypse a year ago, where less people are going into retail stores, buying more online. I think this is going to accelerate the death of a number of brands.
It's very telling.
Yeah, I mean, we saw Pier 1 declare bankruptcy yesterday. J. Crew, Neiman Marcus, looks like Saks Fifth Avenue is not going to be far behind that. JCPenney, although JCPenney is always 15 seconds away from declaring bankruptcy, so I don't put a lot of stock in that one. It's going to be tough for a lot of those retailers, especially those that have high amounts of debt. Some really staple brands, things like P.F. Chang's, Pizza Hut, L'Oreal, These companies are highly leveraged and have a lot of debt on their books. So a hit to sales could have dramatic impacts if or not they survive. The other one I'll mention is movie theaters. So from April to June of last year, movie theaters worldwide made $3.4 billion in ticket sales. To put that in perspective, this year during that same time period, so far they made 102,000. 3.4 billion to 102,000. If you want to watch what happens next to this industry, there's two things to watch for. Warner Brothers is putting out a movie. I can't think of the name of it right now, but it's a Christopher Nolan movie that's coming out in mid-July. That's going to be the big bellwether to see if any more movies get released. If that movie tanks in theaters, which it's a Christopher Nolan movie, big budget, should make lots of money if times were normal. If that movie tanks, you may not see another major movie release through Christmas. They're just going to all pack it in. And this is basically what we're hearing from Universal, Disney, everything else. AMC Theaters has said that they have enough cash on hand to survive till November. So that chain will declare bankruptcy if they don't start turning a profitability by November. So that those are really two big things to watch. I mean, how we interact with this is going to dramatically change the economy. So it's not just about investing. Investing is only a small piece of the pie. Investing is how we get to where we go. The planning piece is why. Why are we investing? What are we aiming for? If I can make your financial plan work by achieving 6% a year, why am I trying to get 15? And why am I opening you up to a 40% loss? You've got to have these type of conversations surrounding planning so that we know what the target is and how we can get there in a very calm, efficient, protected manner. The volatility will kill you, right? If you can't manage the volatility, if you can't manage those downside losses, it can put you significantly out from retirement. And that's really why we want to engage with clients. And we want to take this opportunity to really help them tie together their financial lives. So, sure, it's a lot of information. Someone's got to have a question or something. Anybody?
Have any questions? Feel free to unmute yourself if you have any.
Markets, anything? Insurance, planning? Okay. Well, Khyrstyne and I both put our information in the group chat for Zoom. So if you guys have any questions, you want to find us and shoot us a message, please do. Thank you to Bayou Title for having us. Kathy, thank you for setting this up. Stephanie, thank you for setting this up. It was a pleasure. I look forward to speaking with you guys soon.
All right, sounds great. And we do have the session recorded, so if anybody had to leave at any time, we will have this posted probably within the next 24 to 48 hours. It will have Khyrstyne and David's contact in it. So if you'd like to get in touch with them personally and talk about investing on the side, definitely reach out to them. They seem to be a great, solid company to do that with. So next we have Melissa Welsh and Jude Anselmo with Beyond HR joining us. They're going to be giving us some bookkeeping and tax prep advice for real estate professionals and investors, because as we know, tax season got pushed back to June and July. So they'll be here to help you guys with any questions you have as far as your tax prep goes and submitting those. And then June 4th, we have a special hour-long edition coming up. We're going to have a Stump the Attorney panel, and that's going to consist of Brent Laliberty, Bayou's CEO and president, our Shreveport and Bossier City office attorney, Thomas Hamaway, and our Baton Rouge and Zachary attorney, Rachel Williams. So if you have any legal questions, you have a scenario that you want to run by them, they're going to be available for that hour on June 4th from 11 to noon to answer those questions, or you can try to stump them with a scenario. So we look forward to seeing you guys for those events. Thank you again so much for joining us this morning on the Bayou Connection, and we will see you next time. Have a great day.
Thank you.
Thanks.
Thanks. Bye.